Hello, this is Dave, and welcome to Equities Story. I'm here with the wonderful Mr. Wolf, and this is just general share advice and not personal, as per this disclaimer you can see in front of you. Wolf, quite a few announcements today. Can we go straight to the guts with TLX, because this is a story that we're in at the moment. Now, the price action is fine, so it's still a hold. It's going sideways. So from a technical point of view, a bit disappointed, Wolf, because yesterday it did break over above 12, and I thought if it could go above 12, then we could have hit that 14. Bell Potter's just read the announcement, obviously, yesterday. They put out a buy recommendation on it with a target price of 14.
Yeah.
But right now, with the market 24 minutes in, not good enough. Overreaction?
Definitely for me, overreaction, Dave. I think this is just a stock that no one understands, pretty much, right? You've mentioned to me just before, you've got 3 different brokers and 3 different recommendations. One's a buy, one's a hold, one's a sell. No one's got a clue. No one's got a clue about this story, Dave.
Sorry, not on this story. That was another stock. That was some.
Oh, was it?
Yeah.
TLX,
we just got Bell Potter's came out with just one buy on it.
Okay. Well, let me just reiterate back that I think it's an overreaction for sure for me. The reason why is, again, no one has a clue about where the actual revenue should be, because it's a brand new story, right? We're sort of fishing for information. We're fishing for potential where the revenues could go. You know, when I talked about it maybe about 3 to 6 months ago, when I first put it on at about 7, I thought it can get to about 150 to 200 million in revenues on Illuccix alone. We're heading that way, but I knew that it's going to slow. The growth is going to slow down because it jumped from 0 to 20 to 50 to 100 very, very quickly in the space of 12 months. So we knew that it's going to slow down once they saturate the market with the products, and everyone's happy, right? At the end of the day. So I don't even know what the expectations were out there, to be honest. At the end of the day, overreaction. This is going to bounce back, and it's going to be probably a good buying opportunity for me.
Okay, and Bell Potter's agree with you on that one as well. MHJ, sort of dividend stock, Wolf, and bad retail market. They're holding up pretty well.
Yeah, look, yes and no. It is holding up pretty well, but I still wouldn't touch anything retail, to be honest, because the high interest rates are high interest rates. Okay, we might have stopped, but it's still high interest rates. We need to see them come down for these sort of things to start working, because I've got a high mortgage. I'm not going to start spending all of a sudden because it stopped. I still want to see it come down for me to have more cash to spend, right? So at the end of the day, I think it's just too early for these sort of stories.
Right. Okay. And again, Kogan for used in the same basket as a number story.
Everything in the same basket. Even though they might be trending a bit better, and there's some bottom picking, and people are looking for bargains out there. It's not the way I do things, Dave. I need to see a real turnaround in the retail market, and I haven't seen that yet. Yeah,
definitely. And if you are going to go retail, I think you've got better stories than you.
You hit the nail on the head. 100% there's better stories out there.
All right. Let's have a look at EM2, because again, great drill results, Wolf, but nice drill results. Shame about the mine. We're waiting for the mine when it's been now 2 years of nice drill results. So plenty of copper there, but I think we just need the company to give us some idea when this mine's going to start, and it can be making some money.
We just need faster progress, don't we? I mean, we just need a timeline, faster progress. Let's get this whole. And I know, look, I understand what the company's trying to do. They're trying to make this as big as possible, so they've got maybe more clout where they can present to the public out there, we've got a great big mine. But you don't need to have a huge mine to start all this privileged stuff and start with a smaller type establishment and then build up upon it, right? When the market demands, because this is what can happen. You've got $1.10, now 12 cents. You got to raise cash at 12 cents. I mean, it just makes no sense. So you need to have that sort of balanced approach, right? When do you need to push the button to start progressing this along to get a mine going? And I think they've missed the boat completely.
Yeah, and we like Charlie. He's a good guy. And he deserves success. Well, he's had plenty of success, but he does a lot of for charity. He's a good person. So hopefully this can get going and get over the trend lines, Wolf. Now let's have a look here. we got Flight Center.
Yeah.
Earnings upgrade, Wolf.
Dave,
Now,
how stupid are the shorters? Really? I mean, I've told you that before. Why on earth are you shorting anything that's not broken is beyond me, especially someone's that come up with profit upgrades recently, right? Honestly, I sometimes I sort of scratch my head and thinking to myself, there's a better way of making money. Go and get a normal job.
you know, it's going to look like it's going to have a buy signal if it stays like this by the end of the week, right, Wolfie? And it could possibly retest that sort of 23.57. Yeah.
Yeah.
You know, all these stories that we're putting out as a trade, we're trying to put out a good story, not an expensive story. It doesn't quite gel for you. We, you know, we've argued about this morning. It doesn't quite gel for you from fundamentally happy with it, right? But you know what? This is, we won't put this on as officially, but I think there potentially could be a little trade in there if someone wanted to give it a go, Wolf.
I agree. It's not the easiest trade for me because there are those shorters, right, that they think they're smarter than the market, right? So you're fighting that, unfortunately, force right there. Plus, you know, the story is not brilliant. Let's be honest. It's a decent story, but you know, probably for me better travel stories. If I've got, you know, choose one, right? So maybe it's not, yeah, there's a trade in there possibly, but I think there's better stories, which we're going to talk about in a sec.
Yeah, and if I do look at that, you're looking at 9%, so maybe a cheeky little 5% if you know, but you know, again, let's talk about, well, let's go straight into the story that we do like, right? So you know, we want to put a trade on, and we gave SDR a go before. It didn't really work for us, but you know, the whole thing about the Cincinnati, if it doesn't, you know, if it goes below the trend line, you get out. If it jumps above the trend line, you like the story, you get in. Generally speaking, we want to see it swing a little bit, but it is right next to the trend line. It's an argument the risk reward could be quite good. It didn't go on with it before because it was a different market. The market has changed, Wolfie, right?
Correct. So maybe this time, this is the time to possibly get that money back, right? That didn't quite work last time. So look, as long as the story is good, I'm prepared to give it another shot or two, right? So in this case, nothing's changed fundamentally for the story. They're still growing at that nice up to 30% growth, which they've been coming up. If you look at the broker reports, which of course they've got, you know, much more in-depth research, they're still happy with the story all up. And the market's changed now. Like you said, before they were still marking down anything that's unprofitable, cash flow negative. Now they are preparing to give this more of a go because of the interest rates starting to ease off or plateau, right? Plus, this company is coming closer to its cash flow positivity FY24, which we're now entered, right? So I think maybe this is a better time to buy this than previously in hindsight, where the market's changing its view on these stories. So hopefully we can maybe target that $4, Dave, from here, 365. That's a nice 10%.
Yeah, definitely it is, and so you've got sort of a pretty decent target price of 10%, and your stop loss is pretty tight around sort of 2 or 3. So yeah, it might be an ideal trade that could appeal to a few people.
Definitely a high risk, but I think, you know, this is good risk reward here, I think.
Yeah, that's it, isn't it? It's just good risk reward, which is, I don't know, it's something that we need to talk more about. I think when we do Cincinnati risk reward, it's a really important part of obviously trading. Wolf, EVN, again, you know, not the bad numbers, holding up reasonably well since the announcement. I think there's no reason why it still can't go on with this.
No, look, it's still all about the gold price, really, right? At the end of the day. So it doesn't matter what the company comes up with. It's what does the gold price? I mean, yeah, okay, it does. If they come up with something crap, it will probably fall. Normally, if they come up with a normal type of announcement, they'll be fine. And it's all about the actual gold price. But in this announcement, when you look through it, like I said, it's all decent looking. The two good things in there, potentially for the shareholders out there. It looks like maybe they're going to be looking at better profitability, which means more cash, which could potentially mean there's cash coming back to the shareholders in the form of dividends, bigger dividends, Dave. So starting to look better and better, EVN.
Oh, all right. Now, QBE, Wolf, and you talked about, this has actually got a buy signal on. does have a lot of resistance at 16, but it's been on a tremendous run really since November.
Yep.
How did you take the announcement? Would you obviously it's a whole, but would you be buying this?
Look, yes and no. I mean, it's obviously not for everyone because it's a fairly boring story, right? At the end of the day, and it is market sensitive to interest rates and so on. So it's got its place in an investment portfolio. But as a big story right now in this market, yeah, I think still right now, if I'm thinking that the interest rates are going to be plateaued now for the next, say, 12 months, because they could be, right? It's still decent enough trade or investment for me to hold on to.
All right. Now, CHL is an interesting one because it's sort of a hot stock, and we like the story fundamentally. We saw potential. Would that be the right way to describe it?
Yeah, it's pretty good. I think the market's is a little bit disappointed with the cash flows again, right? Because we know that we need to see that cash flow improve. This is how the market sort of grades things right now, right? To see your cash flow. They're probably less important on these smaller type tech stocks on its revenue, maybe growth. They're more looking going, come on, can you see where you've got some positivity in your cash where we don't have to go back to the market every bloody 3 months odd, right? In this case, I think maybe slight disappointment because, again, the reason why they've been a fairly even cash flow wise is because of the capital raising that they had recently. So at the end of the day, for me, it's still good company, growing quite strongly, Dave, but just needs to please get that cash flow positivity, and then we'll probably maybe go to that races, get back to that $3. But for the moment, a little bit of a struggle, I have to say.
So, I mean, if you bought this as a hot stock for a trade, it's done well, take a profit. Yeah.
Yeah, I think so.
If you're holding it for long term, just expect it, it's going to be still very volatile. Okay. We're only giving general share advice. Here's your call, how you ever trading these things. Generally speaking, we still like the story, but it doesn't look up from this announcement that it's going to rocket up to $3.
No, exactly. But it's a one of those 50-50 calls here, because the announcement wasn't that bad that you're going to go, I'm just going to get out. But it wasn't also that great that it's going to rocket, like you said, right? So you can, if you've got a longer term view, to maybe hold it. But if you've got a short term view, there's probably now a better trades out there, which we'll talk about. Oh, we did one today.
All right, we've already done that. Now, Zip.
Yep.
So still looking miserable, but at least it's up 12% today. A little bit of maybe some light there, Wolf.
Green shoots, Dave. I think that you can talk about green shoots with a company stabilizing cash flow and stabilizing growth wise. So it's actually grew a little bit. The only thing I'm still worried about when I look at I think the last page, the second last page on there, they're losing customers, right? You don't want to see a company losing customers, net customers. So that's my only concern here. It's still way too early for me to get interested in it, but at least it's stabilizing. So maybe there'll be a trade further down the road.
That's not good for Zip to lose customers. That it's sort of they built their business on more and more traction and getting Zip out there. Mm-hmm. Is that because the buy now pay later it's waning a little bit, Wolf, or is it Afterpay just getting stronger and taking more market share?
Good question, Dave. I think maybe there's a combination of three things here. So maybe there's a churn towards competitors, maybe with the slow retail, and we got a bit of a higher interest rates, less people are using that, so they just don't see the need for it, so they just not deregistering themselves. So that's the two things. The thing is, maybe just not happy with Zip, right? At the end of the day, there could be a few different reasons why Zip is losing customers. Maybe, look, I'm going to give it the benefit of the doubt. It's just a period they're in right now, which is a tough retail environment. So that's why probably for me, not right now. Maybe in 6 months, I'll have a look at how I have a different view on this, but right now, no.
All right. Wolf, we talked about LLL, Marley, now in a trading halt. So that does not look good.
No. Once you get suspended, that there's probably furious communications between the company and the government. the problem is the government doesn't furiously respond. It's probably taking their time. Yeah, so I'd say it's very furious communication from the company trying to find out what's going on. Well, look, we're going to find out shortly enough.
Right. Okay. Right. Okay. Now I just want to have a look at NXL. So it's too early, Wolf. But
Yep.
you know, some green shoots, right?
Oh, this is stronger green shoots than Zip for me. The reason why was the actual growth in there, EBITDA growth. So pretty much growth across the board. The only thing that's still letting it down, of course, is the extraneous cost to do with the legal side of things. Even though that's dropping, it's still quite high, you know, 8 million or something like that, crazy legal costs.
Yeah.
I'll tell you what, once you get into trouble, right, with the market and you've done something stupid, it sort of follows you for a little while. So probably a little bit too early for me, but again, a pretty good tech stock when it listed at $5 something. Now it's at $1. So there's a lot of upside to it, but just a little bit too early. I think we need to just wait and give it another few weeks.
All right. Okay. Well, if we've gone through the stories, there's two stories that in the States that had sort of announcement, Tesla and Netflix.
Dave, we need to talk about the most important bit from yesterday, the DSC. We haven't talked about DSC.
I thought I was going to leave that to the end. Well,
this is the end, isn't it?
Oh, didn't you want to talk about Tesla and Netflix?
Oh yeah. Okay. Let's talk about Tesla. Well, sorry, I'm jumping ahead because I'm sort of like DSC. Oh my god, what do we do with DSC, right?
Yeah.
All right, so Tesla. Let me quickly just summarize Tesla. So a pretty good announcement yesterday overall because it had a stronger top line, it had EPS better than expectations, but where they failed at was margins because they discounted to get those sales going, right? So market wasn't happy. After markets, we'll see how the market reacts. So the margins are now coming down to what the normal car operators have got that, right? The traditional car makers. You know, that's a worrisome thing for Tesla because Tesla's always been a premium brand, premium margins, and everyone's talking. That's why, you know, everyone's investing into Tesla. So it'd be interesting to see how the market reacts to this over the next few weeks. But still, you know, I still classify Tesla as the leader in the electric vehicle space. So potentially there would be trades in there. You know, it doesn't look as expensive as it used to do way back, right? So it's not bad.
All right.
Netflix.
And Netflix.
Yeah, again, after market down 6 or 7%. Again, good results overall, but if you look at Netflix, it had a really strong run. So anything that the market could grab onto and go, this didn't work, they're going to slow down. And that's what they found. They found that the top line, the actual revenues didn't quite hit the target. But you look at everything else, it hit expectations or above it, Dave. So pretty harsh market, but maybe that's what we're going to have to see the theme. Anything that doesn't come through with the goods, and you had a really strong share price, you're going to get smashed.
Well, we've seen that with TLX, and we've seen it with sort of DSE yesterday.
Yeah.
And getting back to DSE, because we sort of uncovered sort of more about the story, and you spent some time yesterday listening to the announcements, and I was listening as well towards the end there, Wolf. So what did the CEO say at the moment about the company, how it's going, and what was your general thoughts after you listened to the CEO yesterday?
Yeah, so obviously, you know, let's just set the scene here. So they had the quarterly, the market reacted negatively, everyone thinking, what's going on? But then we found out that there was an announcement by Microsoft that they are releasing their own suite of products that includes backup and recovery, right? This is what DSE is selling pretty much. So everyone, oh my God, DSE is going to get absolutely shellacked. They're going to lose everything. It's not going to be no business. Of course, that's not the case. DSE's got a very small market presence in there. It's a huge market out there. You know, then of course we listened into the CEO speaking at the webinar post the announcement. It was fairly reassuring about, you know, we're different to what Microsoft does, because first of all, we back up our stuff not on Microsoft, we back it up on Amazon Web Services, which makes sense because, you know, if you are going to back something up, you want to be outside of maybe the hack, right? Yeah. So it makes sense. So it's a differentiation, there's the point of differentiation between the two. The price point differentiation is also positive for DSC from that point of view. It's a product that I suppose you need that clients understand, and they've got support with it as well. So I think Sharif made a pretty good case for, he's not really worried at all. So I think that one of the questions was, is there going to be impact? He said none. That's pretty what he said, right? Whether that's enough for the market, and of course, what is the CEO is going to say? He's not going to say, oh yeah, we're going to get smashed. We're going to get, we're going to get terrible sales coming through. Of course, he's not going to say this. So maybe the market's still going to need to wait for that next 2 quarters or 3 quarters to see if there's an impact on growth. But again, I think the CEO did a good job in explaining why it should not impact them that much if there is going to be impact in the first place. So, I think market overreaction. The fact is that this product has been already in the works and talked about for the last 18 months, and only the market reacts yesterday. Just shows how fickle the market is in the first place, Dave.
Right, and you know what? It's last time, Wolf, obviously I was doing the Cincinnati, and it's a really good case study of the Cincinnati trading system, and it was very simple. If you're in it for a long-term hold, you hold it. As long as it holds above that 25, you hold it, right? If you're in it for a trade, maybe your stop loss is around that 29, right? If it's there at the end of the week, maybe take because it might go sideways. For the traders, they might get a bit fed up with it because it might go sideways for a while. But certainly the long-term story, you obviously use the blue line and you'd still be holding it. Okay.
Yeah, look, I had a lot of questions yesterday. What I should be doing? Should I be nibbling? Should I be getting out? That's the typical thing when you see such a thing. But for me, usually it's like, don't panic in the face of an announcement, especially such as this announcement, because it's nothing to do with the actual company. It's more to do with something.
Well, I thought the announcement was very good, actually, Wolf. And when I looked at their revenue growth, it had always gone it had always stepped up in, this is a chartist in me, it had always followed a similar formula moving up, right? So although it wasn't as good as last quarter, it was very similar to how it moved in previous years.
Yep.
So I which is most probably sort of cyclical slightly, maybe towards, something to do with the year, right? So I thought the announcement was excellent, and obviously everyone's just a little bit scared with this Microsoft issue.
Yeah, absolutely. And I think, look, at the end of the day, it could be proved to be a great buying opportunity, right? But it's always difficult to buy on a really big red candle day, because you just never know. The traders are all over this thing. You could, be buying too high. You could be buying, it's just, I think it's better always to just wait the dust settle for a day or two and then come back. Even if you miss the bottom, who cares, right? You're still probably going to make some money if this is all going to be a furphy at the end of the day. But like I said, nothing to do with actual company itself. It was Microsoft announcing that they entered this market. Yeah, I mean, Microsoft entering everyone else's market, right? We've seen it with cybersecurity. They've bounced back. We've seen it with other things. These things bounce back. You're not going to get Microsoft just having sales to their own way for everything. There's going to be competitors, and they're going to have market shares, just like the DSC will have probably a small market share in this sort of market. But the market is absolutely huge, Dave, because every company should be backing up the data.
All right. Absolutely brilliant. Wolfie, you're amazing. Thank you so much. This is superb. Just wind this up. TLX, possibly an opportunity. SDR, sticky trade here. Good risk reward. DSC, long term, nothing wrong with the story. It's a hold. And QBE looking very, very good. And for the brave, they could have a little go at our Flight Centre if they wanted to.
Yep.
On that note, thank you very much to Wolfie, and see you later.
See ya. Cheers.
Bye, mate.